Hello and welcome to this edition of Closing Trades. Right here, Niti now with me, Aisha Faridi and Nikunj Dalme in the studios, holding out very well. Good start to the trading week. We started off quiet, picked up from there, and we've nicely held on to that 25,000 mark on the Nifty. Not too far away from an all-time peak and perhaps a fresh high as well in the offing. What's looking good today? Hindalco is the one which is actually leading the charge. That was not quite the case when we started off trade though, because the day began by outperformance from within the IT sector. But right now it's Hindalco which is gaining ground. ONGC is holding up a steady 3% in trade. There's HCL Technologies, JSW Steel, LTIM as well, even though its ouster from the index has now been announced. So these are the names which are actually holding the roost. And you know, it's interesting to see that it's not just the benchmark indexes, but the broader markets as well are charging ahead, because you've got a solid breadth at your hand. 142 is the count within the F&O universe alone, standing to the advances with just about 44 odd to the declines, with names like Birlasoft, SAIL, Hindustan Copper, Nalco. Metals are the ones which are really charging up ahead. A September cut seems inevitable right now, looking at the commentary coming in from Jerome Powell, and that's what's keeping the global markets afloat.
So Aisha, look, rates coming down in the short term means that profitability will go higher and terminal value will go higher, and hopefully demand should go higher. That is how market narrative has moved. In the medium term, it's always beneficial. In the long term, you can argue back and say that, oh my God, is this rate cut something which is actually indicator of demand slowdown? And mathematically, it's been established that the rate cut cycle, when it starts, equities as an asset class in the medium term, which is 6 to 1 year, it tends to underperform, because the recession is always marked with, a rate cut is always marked with some kind of a slowdown. So is this a repeat of the cycle what we've seen after 2001? Those data points will just come up on your screen. I mean, that's a brilliant data point the research team has pulled out. More for Dow, less for S&P and Nifty, but more for Dow because it's a global rate cycle we're talking about. Is this cycle different? Or are we likely to see a repeat of 2001 and 2007 when the rate cut cycle started, and after 2-3 rate cuts, we saw actually a contraction in the economy? Dr. Marc Faber, editor and publisher of the Gloom, Boom and the Doom report. I love that report, the Gloom, Boom and Doom. How did you come up with this name?
Well, it's a long time ago. I started actually to work in 1970 in New York, and then I immediately started writing reports, also for my personal use, and also because Americans were not familiar with foreign exchange rates and the value of the dollar against gold and the value of the dollar against European currency. So I wrote consistently reports also when I was at Drexel Burnham in the 80s, and then the crash happens in 87, and then people called me Dr. Doom and so forth. So I thought I combined the various names, Gloom, Boom and Doom, because obviously there's also boom, and we discovered many emerging markets in the 1980s and 1990s. So that's how the name came about.
Yeah, that. So according to you, where in the world there is gloom, where there is boom, and where do you think we are headed for doom?
Difficult question. You should ask me easy questions. Now, the point is this. The governments, they publish figures about the rate of inflation. The way you can measure inflation can change a lot depending. You take a basket of goods and services. Depending on how you weight that basket, you come up with totally different results. In my opinion, and this is based on the opinion of some observers that are accomplished statisticians in the United States, the US government is understating the rate of inflation meaningfully. And when this happens, you have essentially wage increases that are below the rate of inflation, the true rate of inflation. And so the government can show GDP growth, but the standards of living of most people is actually going down. This is not the case in India. Say, I've been traveling to India since 1973. I can say that the standards of living of the typical Indian family today is meaningfully better than in the 1970s, when the government was still ruled by the Gandhi family that essentially was implementing socialist policies that they had inherited from the British. And so the free market in India, especially promoted in recent years under Modi, has been a tonic for the economy. Now, I'm not saying it will continue, and I'm not saying the Indian market will go up. But if we look at the world and judge economies according to standards of living, I can say that in India, standards of living have been going up. And we have statistically very relevant information that the standards of living in Germany have been going down, in Britain they've been going down, and in the United States.
Mark, historically a rate cut cycle is always accompanied with financial assets, and especially equity markets, it has come down, whether it is 2001 or 2007. Do you think the same cycle could be at play, that rates will come down and eventually stock markets will come down because the rate cut means slowdown in the economy?
Again, we need to be very clear. Are we discussing nominal crisis or real economic activity? In my opinion, and I'm not talking about the 1% of wealth owners in the United States, or people like myself. I'm involved in asset markets. I'm a beneficiary of inflation. As unpleasant, I resent it as a social observer and economist. But as an investor, I love money printing. Nothing would please the money class, please Wall Street more than rate cuts that push up assets to even higher levels. They're already very high. The US as a percentage of world stock market capitalization is in the sky. But in my view, the standards of living in the US, in other words, I could say for most people, a recession began at the end of last year. Not for me and the richest 1% in the United States, but for ordinary people. And we have seen also with statistics about the employment, these statistics have been faked. They are taken out of the sky, and now they have had readjustments to these employment reports that are showing a much, much weaker economy than the government is telling you.
We've always seen that gold is supposed to be a hedge. It goes higher when inflation. You guessed my question, is it? Your smile is telling me that you already know what I'm about to ask.
I think that if you analyze very clearly the debt level of Western societies, in other words, Western Europe and the United States, and you look at the interest payments that are now growing on these debts, the governments in the Western world, they have no alternative but to print money. They could go to the voters and say, well, we have to tighten our belts, you have to pay more tax, or we have to tighten our belts, you get less subsidies, you get less social security payments. You go to the police force and say, oh, your pensions will be reduced. You go to the veteran and say, your pensions will be reduced. I'd like to see that society in the Western world. There'd be a revolution. And the politicians who propose that, they're going to be voted out. So the money printing is a fact, and there is no alternative. And in this scenario where the quantity of money keeps on growing and we have excess liquidity, gold and silver and platinum and also cryptocurrencies will likely perform reasonably well. There are commodities that will perform better, like last year cocoa and this year coffee. But in general, individuals have a difficult time storing a ton of coffee. So to keep wealth and to have wealth that is relatively safe, and especially you can hide it from the government, you keep some gold and gold coins or gold bars.
Mark, you always look for bad news to find bargains. Over the years I've tracked you, I've always admired your ability to look at bad news to find good bargains. Where is bad news in the world? What is a good bargain according to Marc Faber?
Yes, I tell you, just recently, the Thai stock market has been in a bear market for about 5 years. And recently, a lot of foreigners have given up and written negative reports about Thailand and I think the stock market has bottomed out. I also happen to think that Hong Kong properties and property stocks have bottomed out. I have in my life never seen as much China bashing as is coming out of both the US media and the European media and politicians. These politicians are people, they never worked a day in their lives. They don't realize most of the goods that people buy in Europe, in the UK, in the US have Chinese components. And yet they bash the Chinese about everything. They bashed the Chinese when they built the railroad in Cambodia and Laos. And the Americans, what did they do when they went to Laos and Cambodia? They carpet bombed the country. And now they accuse the Chinese to do things the wrong way and so forth. I mean, you have to think clearly. The media in America and in Europe is anti-China 100%. And Chinese stocks are now cheap. Hong Kong property stocks are very cheap. Today we had a big move in property stocks in Hong Kong. And I've been telling people, I've been negative about Hong Kong properties for a very long time. I wrote a negative report in '97 about Hong Kong, about the rise and the fall of cities. It's a booklet. But now stocks are incredibly cheap.
We saw almost like a financial, Armageddon 2 weeks ago when the yen carry trade started reversing. It, in a sense, is the most popular trade. Do you think that yen carry trade reversal is over?
Well, I think the yen and other currencies will continue to appreciate against the US dollar. And let me explain why. The US dollar has been strong against just about any currency in the world until about 2-3 weeks ago. The price level in America, and you need to add to all the prices in America in the service industry, the tips. Tipping in America is like not a voluntary act, but you must tip people in restaurants, usually something like 20%. So the price level in America nowadays is very high. I have statistics that show that the yen was appreciating in the 1980s and 1990s, and wages in Japan became as high as in the US. Now, wages in Japan are about 1/3 of the wages in America. What it means is that in Asia, wages are about 10 to 15% maximum of the wages in America. So the price level now in emerging economies, including India, is very low compared to the price level in the United States. And I think investors will wake up one day and see how much money the US is printing and what the financial mess will become once people realize that you have to add to the existing government debt the unfunded liabilities of the government that arise from social security and from retirement plans and so forth. That is a multiple of the government debt. So the US has no alternative but to print money, and so the dollar eventually will go down. I think it will go down against just about any other currencies, but especially against precious metals.
Mark, so hypothetically, if someone gives you $1 million, hear me out. Somebody gives you $1 million. For Marc Faber, $1 million is less $10 million. I'll take the bid higher. For Marc Faber, it is 10 billion. I like that expression. For Marc Faber, it is $10 billion. And you're free to invest for next 3 years. But the money which you invest should give a 40 to 50% return in next 3 years. How would you invest that $10 million?
I give it back to you because I don't think that you will make 40 to 50% return in the next 3 years. And I want to sleep well at night. I don't want to lose you as a friend. So I will give it back to you and tell you, please give it to someone else.
What if I increase the time frame to 5 years?
Even 5 years will be 10% per annum.
Yes.
But I look at my money, which I manage among others, and I don't think that is easy to achieve a 10% return per annum. If you're diversified, I like to be diversified. I have different currencies, and I have gold, and I have stocks. I think in some emerging markets, I could see that I could make maybe 10% per annum, including the dividends. The dividends would be, say, 5% per annum, and the stock return 5%, so maybe 10%. But I'm not sure that you make the 10% in real terms, inflation adjusted. That I wouldn't know. But I think that investors should move away from the belief to make money out of assets into the belief that something is not right in the global economy. And the question should be, how do I navigate negative returns in asset markets? Say, assuming everything comes down, for whatever reason, everything comes down, how do I survive best if everything comes down? So my view would be probably precious metals will go down less than other items. But, you know, if everything drops 50% and gold drops 20%, you are like a king because all your friends, they lost 50% and you only lost 20%. So, but what I want to say is really people should change their views and think we had this wonderful asset inflation for the last 40 years. It's going to come to an end. And when it comes to an end, it's going to go downhill. And when it goes downhill, you want to essentially lose the least. It's not a question to make money, it's just a question to lose the least. So that is my view about asset markets.
Mark, so when you say it's about capital protection and less about capital appreciation, where do you think we have the makings of what could be called as a bubble or a trouble? Where do you think this asset class, this market, this instrument, or for that matter, this a particular financial asset is headed towards a bubble?
Well, to tell you the truth, I think everything is in a bubble. I mean, now they sold a T-shirt of a baseball player who was a famous player, Babe Ruth, for 20, I think 23 or 26 million US dollar, a t-shirt. You have to ask yourself, it's grossly inflated. But I think we can discuss what is the most inflated and what is the least inflated. The most inflated is the FANG stocks in sector in the US, the so-called Magnificent Seven. The Magnificent Seven, they have, according to the bank credit analyst, a market value, stock market capitalization, that is larger than all Chinese listed stocks, including Hong Kong. You have to, this is, I have a chart on this subject. This is really something for the history books, that 7 stocks in the US have a larger market capitalization than China with 1.3 billion people and very large and successful companies that we have to see.
Mark, you may not recall, but I distinctly remember when we met you for the first time, it was in 2001 in India. That was right after 9/11. I was looking different. You were looking very different, I can assure our viewers, but that was 2001. You predicted that a big bull market in commodities was about to start. 2007, you were one amongst the first who said, look, there is a problem in the US real estate market, and 6 to 7 months after that, it really got punctured. What, to your mind, could be that 1 5 to 7 year mega prediction or mega trend according to you?
Well, my view is that over the next 7 years, the returns on US equities will be negative in real terms, inflation adjusted. That, I think, is quite clear. And I have maintained for the last 20 or 30 years that an investment in India would be more successful than a typical investment in the United States. I think now the Indian stock market is on the high side. I wouldn't necessarily rush out and invest in India, but I think there's some value in commodity markets. I think food prices are relatively low. And I have friends who are very well informed, and I mean intelligent people. They think World War III is going to happen. I'm more optimistic because I'm an optimistic person. I hope that we can avoid it, but obviously World War III would destroy pretty much all asset markets. That would be a terrible event. And over the next 10 years, as I said, or 7 years, I think if you can just maintain your purchasing power, you're doing okay. And so I still feel that precious metals is a favorable avenue. It may not be the best, but it's relatively safe.
Mark, I remember again a conversation which we had was that, Indians should start buying real estate in island cities, which is as Indians will get richer, you will buy more real estate, more holiday homes, and that is not true.
Yes.
If
Holiday
I look at
homes.
Anything else which do you think a country like India would be consuming, where investors could lay their bets right now? Because I think this conversation we had was in 2010, and you said that what's happened in Spain in terms of Spain got richer and everybody started investing in holiday homes which are in islands. And I can see that happening in India now. Holiday homes are becoming part of every rich urban lifestyle. Anything else which you would like to pick out for our viewers?
Yeah, I mean, if I were in India, and I'm not a specialist on microeconomic facts in India, but let's say what I've seen, both in Switzerland and then in the United States, and also to some extent in Asia, is that a lot of collectibles go up a lot in value. I mean, I'll give you an example. My grandfather, he built a large hotel in 1910 in Engelberg. It's in the mountain. It's famous for the Titlis Mountain because the Titlis Mountain has a air cable that rotates 360 degrees while it goes up. And many Indians would have been to Engelberg and would know the place, because we already had in the 1950s a lot of Indian visitors. And what I saw then is that old posters, propaganda posters about tourism, they went up a lot in price and became collectibles. So when I arrived in Hong Kong, I bought 3,000 posters of the Chinese revolutionary art, of the propaganda art of Mao Zedong. And then I bought badges and so forth. If I were in India, I would buy posters of famous movies and famous actors and store them for 50 years. And then you can get a very high price, I tell you. That's what I would do.
So Mark, we've been speaking, talking, interacting on Zoom. When do we get to see you in India? When do we get the honor and the pleasure to having a cup of coffee with you right in our studio?
Yes, I'd like to go back to India. It would be very nice. I started traveling to India in 73, and then I went to many different places to the south and to Rajasthan quite a few times. The south is something that impressed me deeply because people are so religious, and it's a different atmosphere from the north of India. So for me, India is a wonderful country. And at the time I started to travel to India, it was very difficult for foreigners to get a visa. I was rejected here by the Indian consulate in Chiang Mai on numerous occasions, not once, numerous occasions, because the consulate was such, they always had the most arrogant people in the consulate and incompetent. And they singled out people who were, didn't suit them, and they didn't give them a visa. But now it's easy. Now it's no more a problem.
Pleasure to have you on ET Now. Thank you for joining us. And like I said, I love the title of the report, The Gloom, Boom and Doom. Thank you very much, Marc Faber.
I thank you very much for your time.
Thank you, sir. Thank you for having us.
And I wish your viewers and listeners all the best in their investments. And to remember that, as you know from your religion, that money is not everything.
Nicely said. All right, Mark, appreciate your time. Thank you for joining us. Let's take a break.
Bye-bye.
That was Marc Faber. And, over the years I've interacted with him. He's got this ability of getting some mega trends right. Commodity, the decline in crude, the upcycle in the US bond market. He's really got this knack of getting it right. And he feels that FANG stocks are the Magnificent Seven. So what is FANG? I mean, FANG was earlier Facebook, Amazon, Apple, Netflix and Google. Yeah. Now it's become Magnificent Seven, which includes an Nvidia. Amazon
Facebook
still
is
stays,
now Meta.
Yeah, so it's become Magnificent Seven. With the inclusion, I think, is Nvidia, which is a new one which has got added there. Yeah. All right, let's take a break.
So did you buy that Goa Island as Mark had recommended many years back?
You should always have aspirations in life. So yes, you aspire to do it one day, hopefully, if God is kind.
Okay. On that note, we're going to take a very quick break. Come right back. We'll continue tracking markets, the last half an hour of trade this afternoon on the other side.
Well, welcome back. The market continues to be just around that 25,000 mark. So we are not scaling fresh highs in a hurry, but at least we have not given up 25,000. That's been a good floor for the market throughout the trading session. And after that, it's been fairly range bound, 0.7% higher for the index. In terms of individual movers, JM Financials is up 12%, GSPL is up 12%, Honasa Consumer, Motilal Oswal, Quest Corp, Craftsman Automation, these are some of the names. And in fact, in the last few minutes, Policy Bazaar and Godfrey Phillips has also managed to perk up. On the losing side, however, Paytm is down, Cadila Healthcare is coming under pressure, and then names like Nykaa, etc. are also seeing some profit booking. Let's discuss a few of these stocks with our technical experts as well. Naresh is with us. Naresh, just wanted to get a better sense from you on the likes of Nykaa, Paytm, as well as Honasa and Policy Bazaar. Divergent move on all of these four stocks. What would be the top bet, and what is the stock that one should stay away or book profits / losses from?
So Honasa is a breakout in the near term. It's just that the data is not a lot. And the stock had made a top around this 510 mark after the listing. So it's a fresh breakout, a risky trade here with a stop loss below 490. Paytm is a contra buy wherein there has been a lot of correction as well as bad news today as well. But closer to 450, 500 band is a strong support, which is where I think it should recover from. So it's an accumulated current level. The stock has gone sideways and downwards for a long period of time. Looks interesting at current level. So that would be the best pick out of all.
In fact, let's pick up that story on Paytm forward. We've got Vineet Bulinshkar as well from Ventura Securities joining into the show right now. Vineet, hi, afternoon. How is it that you're reading into the SEBI show cause notice now for Vijay Shekhar Sharma and the sudden knee-jerk reaction that one is seeing on the stock?
Actually, I think it is a story which is being regurgitated. This show cause notice was issued and clarified by the management in Q4 as well as in Q1. So it's nothing new under the sun. And as far as the specific points that are raised there about the VBS investor stake and the other company which bought out the Anthill stake. So the first thing is that, that trust which owns the shares is governed by a board of trusts. So it doesn't directly become ownership of the promoter, Vijay Shekhar, number one. Number two, the Anthill stake that was sold, it was at the behest of the government wanting the Chinese shareholding to come below, to exit the company. So at the behest of the government, that was done. So, I don't see any reason for this show cause notice being, taken up together. And Paytm has already responded to the show cause notice long time ago. So I think it's a knee-jerk reaction. It comes after they've done the deal for 2,000 crores. And I think it's a very good buying opportunity to enter into the stock and, because we firmly believe that Paytm has turned the corner.
Just to clarify to our viewers, these are unverified reports that we are picking up from agencies right now. So we will wait by and get more details on this one and verify that story for you. But right now we are reacting to it because the stock is, of course, in focus. Vineet, so you're saying at 500, it's still a good buying opportunity. What's the next level to watch out for then on Paytm?
I think, this dip 500 to 525 seems to be a good enough price to get in. Company has adequate growth triggers in place. And the business model is absolutely robust and stood the test of time. So we are, remain convinced on the growth story of this company.
About the other new age tech companies, for instance, last week Nykaa was in focus with that big up move. Today it's the turn of Honasa. I know these are not, the real new age tech companies, but nonetheless, these retail-facing cosmetic plays.
But definitely, see, the kind of money that the government is shipping out to individuals, women, children, age-old persons, and also the youth, a lot of money is going to be used. And, recently, Piyush Goyal came out and confirmed the fact that, e-commerce is really booming. So I believe that all these counters will do very well. They have far and wide reach across the country. They are homegrown platforms, well recognized by the youth. And we will see an uptick in their growth story as this consumption money, which is going to come into the hands of individuals, is not a one-time affair.
Just before we let you go, Vineet, any other fresh stock ideas that you would have managed to find in this market?
In fashion, I think, is one stock that has not really participated aggressively. So we are very constructive on the entire consumer space. And they're very focused on their 5-6 brands that they deal with. So that stock can do well in the days ahead.
Just to say that when you say the Paytm model has stood test of times, what exactly are you referring to? Because their UPI business is still not making money. MDR business is the only one where they're enjoying the spread. The cash making business which they have, which was the movie ticketing business, that they've already sold out.
Okay, so let's see what is different from Paytm ever since Paytm Banks was taken away. They've stopped their wallet. They've stopped doing BNPL loans, and they've stopped housing rent on the Paytm app. Apart from that, all the businesses are intact. If you take their, as they share in their presentation, if their January sales was at 100%, their entire business is back to that level after hitting a low of 81% on the index, back to 97. They're well on their verge to, EBITDA break even, which they did last year, only because of this RBI ban on Paytm Payment Bank, that the organization suffered a bit. But all things are firing back on all four cylinders, and it is one of the best bet for online, mobilization of merchants. Nobody else has been able to do that, and we believe that all these, their online loans, their merchant payments, and all these which are money making are going to get them back into the black latest by the fourth quarter of this year. And in our opinion, they will be EBITDA positive after ESOPs also, and net positive in FY27.
Great to have you on the show. Thank you so much for taking the time out and speaking with us today. Let's just address the markets as well, because it's been a solid start to the trading week. We're holding 188 points higher, no less, well above that 25,000 mark. And more importantly, it's across the board a move that you're seeing today. The broader markets as well participating. What started off with the day wherein you had IT outperformance, now more and more sectors are participating. In fact, metals is one really, really strong trade today. Kunal, what next in store for us? Because after that consolidation from Tuesday up until that very, very sedate kind of Friday, we're back with a bang.
Yeah, we are back with the bang. We are back above the 25,000 mark, something which we anticipated last week also when we were discussing. And I strongly believe that what we are seeing today is two important sectors which are making a comeback. One, of course, is the metal stocks which have made a very strong comeback. In terms of the Nifty Metal Index, we've closed the gap which was created on the 1st, 2nd August, sell-off for the markets and for the metal index. So which means that a major overhang in terms of selling pressure is now out, and we could now be looking at the index going into further uptrend. And the second and the most important index, which again I think is very close towards an all-time high level, is the Nifty Financial Services Index, which I think is just 1% or 1.5% away from a lifetime high breakout. And that's an index which has also seen a further bout of momentum. So I think these are the two indices which are now looking very strong. And when you're looking at this market phase over the last few weeks and months, that sector rotation has played quite aptly. I think this could be a time where we may see these two sectors starting to outperform.
Okay, we will wait by and watch out for that. But time now to head into a very short break. Don't go anywhere. Last 20 minutes of the trading session. We will track that when we come back.
All right, Anand Tandon also joins us, the independent market analyst. Anand, good to have you back. Thank you for joining us. Anand, this market, the bull run continues, and it continues, and it continues. So what should one do?
That's right. It continues and it continues, and therefore one should enjoy the ride to the extent one can. It is a little difficult to kind of try and look for sector rotation and try and time it, because it is not as if the sectors are going up with any major logic, other than the fact that those that have underperformed have perhaps caught up and so on. But by and large, the market overall is expensive. It doesn't mean it can't go more expensive than here. And therefore, the best thing that one can do as an investor is just stay invested.
Kunal, we are talking about defense stocks, right? How come that drop is not getting that much of attention? 25-30% drop in railways, defense, shipyard. It's not catching a lot of attention.
Yeah, it's not catching a lot of attention because, you've not seen a sharp sell-off into these names. It's been more gradual. And that's why I think it's not been picked up as either a sell from traders who've been holding on to long positions, or even if even because the pace of sell-off has been very gradual, you're not seeing any buy-on dips or many major momentum coming back into these names. I think that's where you're seeing that these stocks have not participated in the last 500, 700 points recovery of the markets, and I'm talking of specifically from the 24,500 mark, where the Nifty faced a lot of resistance. So I think in that pocket also, these stocks have underperformed. You've just seen these stocks maybe showing one or days or 2 days of price uptick, but then that gets sold off too. I think if I'm not wrong, HCL had a similar kind of a price uptick. The stock went up to 4,900 or 4,950 mark on Friday. Today the stock is back again at 4,800, 4,850 levels. So that itself tells you that it's just been very mild kind of a price trends for these stocks because of the way the prices have trended on the lower side. And till the time the pace of correction doesn't intensify, you don't see aggressive buyers coming back into the fray. So I would probably believe that traders are waiting out for some sort of a pickup of momentum, either on the upside or a sharper correction on the downside. That's where I would probably believe that these stocks would probably find some bit of momentum.
Is the best of the gains over in some of these defense, railways, and some of these shipyard stocks, Anand?
Well, I think the bulk of it is. Now, from your own, even if you assume that your valuations don't contract, the best that you can expect is an earnings growth kind of thing, because all said and done, from a valuation perspective, these stocks are extremely expensive. If you are looking at the kind of growth that you expect, you would get mid-teens to let's say 20, at best 18-20% kind of growth rate for most of these companies over the next 3 years. So you may still be able to get those kind of growth rates, assuming that the market valuations don't contract. But I would imagine that it is possible that you will get a little less than the earnings growth as well, to be able to correct for the kind of market growth. At the end of the day, you came from a very low base with no expectations of large and sustained order. Now that large and sustained order has come in, the market has corrected for all of that and factored that in. And from here on, it is not likely that you will be able to sustain grow the same kind of growth rate that you witnessed in the last few years in terms of order flow. So with the exception of companies which are, let's say, able to export, where again the market can be very large, those that are largely catering to the Indian defense ecosystem will have to have a more sedate and moderate growth rate at best.
Top, words coming in as far as what is happening in the stock market right now and some of these specific pockets. For now, in terms of the markets, it's some of these brokerage companies which are doing quite well. Pick up a JM Financial, 13% higher. Motilal Oswal is 9% higher. Some of the other names are also gaining ground. Is that a space that you would invest in incrementally, Anand?
So, I mean, this is obviously a very cyclical place, of course, which has become a linear growth because for the last several years now, the market has done well. It's very difficult for most companies to create a moat, especially on the brokerage space. The wealth management is a little more sticky, a lot more difficult for clients to move in and out. So if you are looking at this kind of area, then wealth management, asset management may be places, but I prefer even more stickier businesses like insurance. So to my mind, the best option in terms of moving from looking at savers, from investors rather than savers, would be to actually go into insurance.
Supermart 4,900. What is looking strong today? Mahindra and Mahindra Finance, Chola, Bajaj Finserv, NBFC space. Kunal, first private banks, then NBFC. That's how it moves. But this time it's been NBFCs first and then private banks after that.
Yeah, and I think NBFCs have shown a lot of strength, very good strength. So I think it's been led by, when we look at the price composition or the stocks which have moved up first, Shriram Finance was one of the first ones to move up higher. The stock gave a breakout. The stock scaled past above those levels, went up to 3150, 3120 odd mark. I think stayed there for a couple of days. Then it was followed by M&M Finance, which managed to come back again into a breakout of 300 levels. There are still many stocks which are lagging behind. So, for example, Chola Finance is lagging a bit behind in terms of the price trends for many of these, NBFC names. You've seen the likes of L&T Finance. That's a stock which is still lagging behind by, I think, a margin of 7% to 9% from its previous major swing high. So I think that probably adds to the texture that maybe I think the sector and few specific stocks from the larger cap names are leading up and now others are following up. And I think that generally gels very well, because when you see sector trends in the making, the initial part is that there are few stocks which gets outlined in terms of leaders. Once that part is done, It's the other stocks which start to move up and chug along, cover up the underperformance, and then the entire sector gets a lot more vibrancy. So I think we are now getting to that stage too, where many of the other mid-cap stocks, the ones which are underperforming, they could now probably try to play a catch-up.
Okay, take a look at Tata Elxsi. Not sure what put the fire under the belly of that one. It spiked as much as 10%. Naresh, any view on Tata Elxsi?
So it's been a long time the stock has done anything compared to the rest of the market. So would still wait out. It's just a single day move. Same is the case with Tata Tech. So the follow-up is not great. Would prefer the other IT names.
Do you have a view, Anand, on IT and specifically these couple of names, Tata Elxsi, Birlasoft, Tata Tech, even NIIT Limited for that matter?
Well, as I started out saying, it's a little difficult to justify individual stock moves. Some of it may be because of factors where there is either a report or somebody has recommended it. It's as simple as that. Somebody has bought a set of stocks in the case of an IIT today, therefore that could be a trigger. Broadly speaking, the IT services company by itself are largely indistinguishable. At best can be classified among large and small. Those which have a little more nuance in terms of the product area they offer some exposure to, they are a little more, they have a little bit of a moat. But even then, there is nothing which you can really touch, put a finger to and say that, this is the reason why you should be buying it today.
What about real estate? JM Financial has today initiated coverage on the real estate pack. One would say they are late to the party, right, Anand? Or do you still see value on table for the real estate pack?
Well, I think real estate, as you said, directly, if you're looking at the companies themselves, they are actually done very well already. And to a large extent, to my mind, the cycle has also somewhat matured. The price action shows you the price of real estate is now galloping, which itself shows you that you're past the peak. Because the best situation is you have a moderate increase in price and a large increase in order book, and that's the best situation to be in. We are now getting to a stage where the prices have become fairly expensive all over again, and the companies are selling whatever they have as hotcakes, which means that you are getting past the middle of the cycle. If you are looking at the sector, again, I would argue that housing finance offers a better opportunity for the simple reason it offers you a more diversified portfolio. And some of the newer companies that have come into the space are actually doing reasonably well and are showing a fairly good growth, both at the top line and bottom line.
DLF 848 going with a flat kind of a day. It's not turning out to be like an amazing session, so to speak, at least for some of the real estate stocks. Naresh, they say that real estate normally lasts for 7 years in terms of a bull cycle, and it's been 4 years into this bull market for real estate. Can I say the same also holds true for real estate stocks?
Tough to take a call because nowadays cycles have say reduced also in a lot of cases. But overall, the real estate pack as such, technically, if you were to look at all the stocks, they still look very strong. It's just that the amount of move which happened in some names like Prestige, Soba, wherein they went up 100 to 200% really fast, it needs a consolidation. The BSE real estate index also did really well. So out here, the view is it's a consolidation phase. Time to keep looking at stocks which have underperformed. So something like a Kolte Patil or a Suntech Realty or a Mahindra Life, names which have underperformed could actually do better from here on.
Point taken. So that's a view coming in on some of these real estate stocks. But what else is buzzing apart from some of the brokerage names and the IT names are names like Quest Corp, BLS International, Gillette India, Godfrey Phillips, Polymed, Birlasoft, etc. They're also doing quite well. Anand, specifically on metals, I wanted to pick your brains because, of course, right now there's a bit of a reaction coming into what's happening across the globe. But structurally speaking, should one look at metals as an investable opportunity and an idea, or just stay away because of the complicated nature?
Cyclical product finally, right? So look, we have only two real businesses in terms of metals. We have either steel or aluminum. In aluminum, your choices are limited to Hindalco and Nalco for all practical purposes. Hindalco, both they are doing reasonably well, especially Hindalco is doing reasonably well in terms of growth, etc. But the capex intensity over the next 2 3 years is going to be phenomenal. And if there is any slippage, that will mean cash flows will become a little more stretched. So from here on, while I would expect that the next couple of quarters at least will show reasonably good growth rates in terms of the current profitability, again, I would argue that you are at the top of the cycle here. In ferrous, the situation is totally different. I'm at a loss to understand why the domestic market is so gung-ho about steel and steel products. You have to only look at what Bao Steel said in China a few days ago about the kind of surplus that is there in the international steel markets and the way the prices are headed, to see that this is a business which is way past its prime in terms of the international steel prices. And I don't see any reason why you should be getting onto the bandwagon at this stage.
Not the best time to get on the metal bandwagon at the moment. But let's take some BTSE trades, because it does look like the market is ending in the green for now, comfortably around the 25,000 mark. Naresh, what will be the buy today, sell tomorrow idea?
So that would be a buy on HCL Tech, a new breakout, new all-time highs here. Stop loss at 1695, target price of 1750. Second would be a buy on M&M Finance, which is trying to make a breakout move. Stop loss at 310, target price of 325.
This week, there's actually the annual investor meet as well, which is lined up of HCL Tech. So maybe the street is expecting some sort of announcements around that. But Kunal, what's your BTSE trade?
So the first one is one Bajaj Finserv, the stock finally coming back to a breakout. We discussed this on the Chartbusters today, that how the stock is poised for a potential breakout closer to that 1700 levels. So would suggest a buy with a target of 1750 short-term wise and stop loss at 1650. And L&T Finance is something which is forming a bullish hammer pattern on the hourly charts. So would suggest a target of 176, stop loss at 165.
Okay, on that note, Kunal, Naresh, Anand, we let you go. Appreciate you making time and speaking with us. So that's the market setup right now. Managed to scale 25,000, not the fresh all-time high levels. But nonetheless, Nehi can't be complaining about the kind of momentum that we have seen, especially with the global handover.
Absolutely, Anisha. Let's take a look at how the markets have panned out today. 25,010 is where we're poised to end the day as of now. Just a few minutes left in today's trading session, but looking like we'll end above the 24,000 mark. Like Anisha said, we came really close to that all-time high, but we were not able to scale that today. Taking a look at Sensex also in tandem with Nifty, 0.7% hike coming in on that front as well. You had India Wix that was also nominally higher, but not much to worry about. Advance decline ratio evenly distributed, but in the favor of the advances and the broader markets. Nifty Midcap did pretty well, 0.7% hike coming in on the Nifty Midcap. You had Nifty Smallcap, however, was bucking the trend, just a 0.3% hike coming in on Nifty Smallcap, but in the green nonetheless. Let's take a look at some sectoral gainers and losers in today's trading session. You have Nifty Metal that has outperformed all the other sectoral indices, more than a 2% gain coming in on Nifty Metal as well. Names like Nalco, SAIL, Hindalco, Hind Copper, all of these did pretty well for Nifty Metal today. Realty, IT, Energy, Nifty Bank, FMCG, Auto, Pharma, all of these indices have ended the day in the green. However, Nifty Media and Nifty PSU Bank are your two indices that have flipped on to the red side, and Nifty PSU Bank also 0.5% in pressure today, dragged by Bank of India, Union Bank, IOB, Maharashtra Bank. All of those stocks led to Nifty PSU Bank being 0.5% lower as of now. But let's quickly shift focus, take a look at all the important stocks to talk about in today's trade. The big buzzers today, you had Honasa that saw stellar double-digit gains today, but simmered down a little bit, and as of now gaining with 7% higher. Now, PTC Industries has been locked in upper circuit throughout today on the back of that hot rolling mill acquisition. Another stock in upper circuit today, 5%, was Zentech because they've announced to raise 1,000 crores via QIP. However, on the flip side, you did have Zydus Life today that was down 6% despite the news of acquisition of Perfect Day. Max Estate, however, was up 6%. NCLT has approved that resolution plan of Delhi 1. Religare was a stock that did not do very well today, down 4% on that index as well as the ED raided the homes of the top management. Transport Corp of India up 1.3%. You had Shilpa Medicare that did pretty well today, up 4.5% on the completion of their new clinical trial phase. On the back of order wins too, some stocks were in focus today. You had KEC International, that stock did pretty well on the back of bagging an order worth 1,079 crores. Ashoka Buildcon was the lowest bidder for another order of 478 crores. So Ashoka Buildcon also did pretty well in today's trade. However, these stocks have ended towards the flatter side but with a slight positive bias. JSW Energy was also in focus today on the back of an order win coming in for that company. On the brokerage side, then you had Bansal Wires that was up 5% after Investec initiated a buy, target price of 440 rupees. Encure Pharma also did pretty well today. Jefferies initiated a buy with a target of 1600 rupees. However, on the flip side, you had a Nomura note coming in on Apollo Hospitals where they've downgraded the stock to neutral from a buy, have hiked the target price, but that stock has ended the day with a 1% cut coming in. BHEL also on the back of order win, that stock was a buzz but has ended on a flat note. But well, yes, that's what the market breadth looked like, and that is what we're shutting shop with. 25,010. We've managed to close above the 25,000 mark today for the Nifty. Let's see and let's hope if we can scale a new fresh high tomorrow.